$1 million per Bitcoin. Two of the most credible voices in crypto just went on camera and made the case. But they disagree on when. One says 2035, the other one says potentially 24 months. This week on Signal and Sense, the math, the timeline, and the catalyst behind the 1 million Bitcoin thesis. Welcome back to Signal and Sense, the show where we track what the people building the future are paying attention to so you can do your own research from a smarter standing point. Quick reminder before we dive in, nothing in this video is financial advice. We track signals, not give stock tips. Do your own research, talk to a financial professional, and make your own decisions. This week, we are tracking two interviews. First by Matt Hougan, Chief Investment Officer of Bitwise Asset Management, one of the largest crypto asset managers in the world, speaking with CoinDesk. Second, Adam Beck, CEO of Blockstream and one of the earliest and most respected cryptographers in Bitcoin history, speaking with Cointelegraph. Both were asked the same question: when does Bitcoin hit 1 million? Their answers could not be more different, and both are worth understanding. Signal number one is Matt Hougan's case. And unlike most Bitcoin price predictions, it is built entirely on math, not sentiment. Hougan reframes the entire question. He says Bitcoin is not a crypto asset competing with other cryptocurrencies. It is competing for the share of the global store of value market, the pool of assets humans use to preserve wealth: gold, government bonds, real estate held as a hedge. That market is roughly $38 trillion today and has grown at 12% compound annual growth rate for 20 years. Here's the math he laid out in the interview. Bitcoin currently holds about 6% of the store value of the market. If the market continues growing at 12% per year for the next 10 years, and Bitcoin grows its share from 6% to just 15 to 17%, you get to $1 million Bitcoin. His exact words: you don't need much to get there over a 10-year period. Bitwise formal long-term capital market projection 1.3 million by 2035. That is its baseline. That is before any additional catalysts. Here is where Hougan's thesis gets genuinely interesting because he says 1.3 million might be the floor, not the ceiling. He introduced what he calls the ladder. $1.3 million target is based purely on Bitcoin as a store of value, digital gold. But he says geopolitical shifts this year have opened a second use case: Bitcoin as an international settlement currency, a neutral, non-sovereign rail for cross-border transactions in a world where dollar dominance is being questioned. His words: if Bitcoin could be both a store of value and an actual currency, then the price targets we've been talking about, 1.3 million by 2035, I think you have to ratchet that up maybe another $1 million increment, because that's a huge addressable market. Store of value thesis 1.3 million by 2035, and the international settlement thesis 2.3 million. That is a bull case. And importantly, Hougan says that the world does not have to fall apart to get there. He says shock events like wars and financial crisis open the door. But once Bitcoin is normalized in that role, it finds more everyday use cases. The door just needs to be opened. Signal number two is where the video gets urgent, because Adam Beck is not talking about 2035. He is talking about potentially 2027 or 2028. Adam Beck is not a commentator or analyst. He is one of the architects of Bitcoin. His Hashcash proof of work system is cited in Satoshi Nakamoto's original Bitcoin whitepaper, and he has been in the space longer than most people, almost anyone alive. When he gives a price timeline, it carries a different weight than the Wall Street forecast. When Kieran asked back what Bitcoin needs to reach 1 million beyond just the passage of time, his answer was striking. He said, not much, actually. I think just the market dynamic could do it with the current demand almost. In my view, this past halving period could have done that just from the new retail interest and new ETFs, even without institutions. And on timing, he gave a specific window. His words: I certainly think seven-figure Bitcoin, the $500,000 to $1 million range, is closer than people think. Personally, I think it's possible in the next 24 months, potentially. 24 months from today puts the target somewhere around mid-2028. Here's the mechanism Adam Back points to, and it is simpler than most people expect. Back notes that people forget the previous halving cycle had three separate tops before it was over. His point: we may not be done with this cycle. Each halving reduces the rate at which new Bitcoin enters circulation, tightening supply at the exact moment demand from the ETF and institutions is accelerating. That math does not require a new catalyst, it is already in motion. He also made the point that it is easy to overlook. People can only sell once. What he means is this: every time a wave of sellers exits at 64,000, at 69,000, at 73,500, they are replaced by buyers with stronger conviction and longer time horizons. The weekends have been flushed. What remains is increasingly sticky institutional capital. That is exactly what Hougan confirmed when he said ETF holders held through a 50% drawdown with less than 10 billion in outflows on 60 billions of inflows. And then Bag revealed something specific. He has actually bets on the table. One bet is that Bitcoin hits $1 million by the end of the halving cycle, 2028. The second bet is that Bitcoin's market cap reaches parity with gold. Gold's market cap today is roughly 22 trillion. Bitcoin is approximately 1.5 trillion. Gold parity implies a Bitcoin price somewhere around 1.1 million at current gold prices. He has skin in the game, and that matters. Signal number 3 is where Signal and Sense earns its name, translating the thesis into something you can actually research. If Hougan and Back are right, even partially right, there are 3 publicly traded ways to track this thesis. First, Bitwise Bitcoin ETF, ticker BITB. This is Hougan's own firm's product. It holds actual Bitcoin and gives institutional and retail investors direct exposure. Assets under management, just under 3 billion. If you believe the store of value thesis, this is the cleanest expression of it. Second, iShares Bitcoin Trust, ticker IBIT. BlackRock's ETF, over $55 billion in assets under management, the largest Bitcoin ETF in the world by a significant margin. If banking credit against Bitcoin arrives as Saylor predicts, IBIT is the institutional gateway. Third, Strategy, ticker MSTR. Michael Saylor's company now owns 780,897 Bitcoin. It backs 24-month timeline plays out and Bitcoin approaches 500,000 to $1 million. MSTR, which is essentially leveraged Bitcoin exposure through company treasury, would be one of the most dramatic beneficiaries. 3 tickers, 3 different risk profiles, all pointed at the same underlying asset. Here is the honest framing of these 2 expert views, because they are not contradicting each other. They are complementing each other. Hougan is making a 10-year institutional case. His $1.3 million target by 2035 is built on conservative assumptions about market share growth and a 20-year historical trend line. It does not require anything dramatic. It requires Bitcoin to continue doing what it has been doing, growing its share of global wealth preservation for another decade. Back is making a 2 to 4 year market cycle case. His timeline is based on halving dynamics, the absorption of sell pressure by stronger hands, and the simple fact that the current institutional demand is unprecedented. He is not contradicting Hougan. He is saying that the market might get there faster than the math suggests because the demand side is moving faster than any model predicted. The range is possibly 500,000 to $1 million by 2028, according to Back. Definitely 1.3 million to 2.3 million by 2035, according to Hougan. This disagreement is not about direction. It is only about speed. And right now, Bitcoin is sitting around 74,000, less than 3% from Jordy Visser's technical trigger. All of these timelines start with one move, breaking $76,000. So what connects Matt Hougan with Adam Back? 2 experts, 2 methodologies, 2 timelines, 1 shared conclusion. Hougan arrives at $1 million through market structure math. The store of value market grows. Bitcoin takes share. The math works out over the decade. Back arrives at 1 million through market cycle dynamics, havings tightening up, institutional demands absorb sell pressure. The move happens faster than anyone modeled. Neither of them is making a speculative bet. Both are making structural arguments rooted in data. Hougan is asset allocation flows, in Hougan and asset allocation flows, and back in supply economics and halving history. The thesis is simple. Bitcoin is the only fixed supply asset in a world of infinite money printing. The store of value market is 38 trillion and growing. Bitcoin holds 6% of it today. 1 million requires 15 to 17%. That journey has already begun. The only question the two experts disagree on is how fast you get there. Let's bring it home. Two experts, two timelines, one destination. Hougan, CIO of Bitwise, formal target 1.3 million by 2035. Bull case 2.3 million if Bitcoin becomes an international settlement currency. The math: store of value market growing at 12% per year. Bitcoin going from 6% to 17% market share over 10 years. The investable players: BITB, IBIT, MSTR. Adam Back, CEO of Blockstream, cited in Bitcoin's original white paper, timeline potentially 500,000 to 1 million within 24 months. Mechanism: halving dynamics, institutional absorption of sell pressure, stronger hands replacing weaker ones. He has actual bets on the table, 1 million by 2028. As always, do your own research. These are signals, not recommendations. But when the two of the most credible minds in crypto agree on the destination and only disagree on the timeline, that is worth paying attention to. Which timeline do you believe? Hougan's 2035 or Back's 2028? Drop it in the comments. That is the debate I want to have with you this week. And if you found this useful, subscribe. New signals every week on Signal and Sense. See you next time.